Let me tell you, I am pretty excited for this year, what's to come when it comes to real estate. I had a sneak peek of the market. I had a felt, but I really couldn't close on anything back in 2022. But this is the first monthly real estate update of 2023. I will give you guys some breakdowns and insights. Like I always say, it's always a good time to buy it. All about the numbers. Like, does the numbers make sense? Look at the cost and look at the rental income. If you're in it for the investment side of it, but if you're buying for your own leisure or just to be with your family, there's other factors that you have to consider. So let's just dive right in. All right. So first thing we always do is look at our current mortgage rates. We check in Google for that, and it looks like we're at 6.869. That's just the average rates. Doesn't mean that's the actual rates. If you're getting an FHA, speaking to my lender recently, he said that the FHA rates are actually lower than conventional. And conventional has a much more amount of restrictions that you have to go through. FHA, you can actually get into a home in a much lesser restrictions. Although you have the whole PMI thing, the private mortgage insurance, as it's abbreviated as, they're always around that. If you utilize a lower down payment, if you had 20% down and only put 3.5% down and the remainder 16.5%, you actually invested that property. You invested that money instead into the markets, different things. You are actually able to beat into a conventional. Like you'll beat the rate that you'd be able to save if you actually had put 20% down. That's why I always say if it's your first home, and it's an investment, not in the sense of like you're just moving in with your family. But if you are utilizing it to the point where you're renting part of it, you're staying at home, because FHA does require you to live in it. It's for first-time home buyers, not really for purely investment. Like it's like a hybrid. Like you got to live in it, and also you have the opportunity to invest in it. And if you're doing both of these things, then yes, it's a great way to go. Conventional, it's a better way. If you do have the cash 20% down, or if it's not your first deal that's happening, you've been in the market for quite some time, yes, and you're not actively into the whole investing thing. When I'm talking investing, it could be mutual fund index funds. You don't have to invest in individual stocks for you to actually beat the rates that you would save money off doing a conventional versus an FHA. You can actually do this with just index and mutual funds, as long as your returns is much further than the interest rates that you're paying. There's a whole math into it. This is not what we're going to get into this video. It's really for the updates of what's going on in the markets right now. Where have I been looking? So I still have my targeted areas. So that is Atlantic City. That is Maryland, Baltimore specifically, Jacksonville, Florida still. I don't know any other parts of Miami yet. In terms of Texas, I'm still contemplating between Dallas and Austin, certain areas. And then there's also on the west side, there's San Diego, which I've also been optimistic about. But the top of my list right now is Atlantic City because it is the closest to me. I'm also trying to do this on a FHA loan because the first one that I have right now, I have had it for several years now. And they do allow you to move because I want to be in a different scenery, and plus, because of my nature of work, there is offices that are nearby as well. So I have the ability to gain more exposure and experience of that area and see what it's like working within the clients that are in that arena as well. I'm completely remote, so I can pretty much work from anywhere. Those are the guidelines for pretty much what I had to stick around by. And plus it has to be 100+ miles away. Although I'm looking for doing this under a secondary FHA loan. However, with God's plan, you just never know. You may plan so many different things, but it doesn't turn out to be exactly as you intended. And this is why we also lean upon God for his guidance to maneuver us. Because I've also recently put in an offer for a lot, and this was in New York. The lot was being offered at $60,000. It's a very unconventional size. It was 10 by 100 feet. There are some iffy things about it because it was done using an easement. I don't really know all the full tales of what that entails, but once the attorney started talking and telling me about all this stuff, you know, as much as a calculated guy I am, it kind of went over my head. And I'm like, that's your expertise. You couldn't focus on that. So we had tried to negotiate with the lot. However, this past Sunday, literally like me asking God, if this is not meant for me to be, let it not happen. Because everything seemed to financially make sense. They only wanted 20% down initially. I was able to get it at a market rate, and the term was going to be for 4 years. So it wasn't going to be expensive, about $1,000 monthly, $12,000 down for a 20% down. But there's so many things I would be able to do with it in the future. With a lot, of course, the parking space, but building wise, not right now, you are not able to actually build on a 10 by 100 lot. I doubt it. The city would let you do that. Although New York have relaxed a lot of laws where, for example, my parents' home, they had a 2-family, 2 stories in that area. It was really family oriented. Now you're seeing the same structure houses with like 4 extra units on top of it. It just looks very odd. However, they've relaxed those laws so allow people to build higher and further up. And I'm sure they had to drill down further into the foundation in order for them to support the higher rise of such a building. So that was one transaction which I completely let go because I asked God for that clarity. And next thing you know, within that same day, maybe a few hours later, my realtor hit me and said, nah, they wanted $28,000. No, just doesn't make sense. The reason why it didn't make sense, and I'm going to explain, because if I am able to go through with an FHA, for example, and I purchase a $400,000 home, right? And the mortgage comes out about to be like, I don't know, $4,000. But the down payment would definitely be under that $28,000. So I'm seeing a better opportunity for me to put that $28,000 elsewhere to use where it can appreciate, right? You have a property that's appreciating. One, you're able to cash flow from it as well as receive a lot of tax benefits. With a lot, you do not get that at all. So I would have put $28,000 and I can't get any tax deductions from depreciation value from renting out part of the home. It does appreciate because of the area. However, it's not cash flowing. Like, really, how much can I really cash flow? The fact that the lot is 10 by 100, meaning it can only fit 1 car at a time. Therefore, I would not be able to actually park like 5 cars, although it could realistically fit about 5 cars, but I can't get them to the point where if this person was trying to leave and they're parked in the middle, you literally have to drive away the 2 cars in the front of the lot in order for you to get that 3rd car out the way. So it's not when it comes to like renting it for parking purposes, it just didn't make sense in that arena. So I saw a different opportunity where I could put that $28,000 to good use. The reason I'm sharing this is if you come across a similar situation where you're contemplating a piece of land versus getting actual property that's already built up and everything, and you can actually collect rental income from it, just go for that. It would be exciting to have something that you can start from scratch. Yes. However, you need, in the beginning, it's good to have something that's already running so you can build that nest egg and foundation, because in a few years down the line, that same $28,000, let's say I'm renting out a good portion of units and it's able to pay itself off after like 5 years and such, and I didn't put that much into it, right? It was continuous cash flowing. The appreciation of the property would probably gain like, let's say $150,000 in equity. And I really didn't put that much into it. Now, the lot is not going to do that, right? It's not going to cash flow, build that much in equity, as well as give you the tax depreciation that you can harbor in every year from your taxes. So that's the reason why I didn't choose to go into that. But let's just dive right in. What have I been looking at? So we see here interest rates are at 7%. So let's just keep that number in mind for 30 years. I don't really look at 15 years. I shared another video on why it's better to do 30 versus 15 because you can invest the money and your money can grow much faster. It also depends on the market rates that you're getting, but I always think 30 because rates will reduce. They're not going to stay as high as they are right now. They're going to reduce at some point, and you want to take advantage of that where you refinance utilizing the equity. Don't ever put money into bringing the interest rates down. That's one thing I learned from one lender. I tried to do that 1 year. He said that doesn't make any sense. You're paid an extra, but wait a little bit longer, refinance into a lower interest rate, and invest the cash elsewhere instead. You're gonna save a lot much more money that way, because that's the reason why you're trying to pay down the interest rates, is so that you can save money. It's not really worth it for you to do that. So 30 years, we always look at that. But let's just see if there's any other sites that has any other updates. One place I check is on Bank of America. Oh, it's not showing it right now. It typically does show it, but it's not. Not sure why. Oh yeah, it is showing it. My mistake. So 6%. So that's pretty cool and realistic. And another site I do check is NACA.com. NACA has these loans, but they're very complicated. It's not really meant for you if you're living in a very urban area for you to get these type of loans. But I typically go on their site just to see what the rates are, because they're almost in real time whenever they put the rates. Not these that are up here. Those are the below market fixed rates, which they advertise, which if you get into the program, you qualify for it. Those are the rates that you would get. However, the ones that are down here, as I'm highlighting, you see the 6.25% for 30 years. That's what I'm looking for. So 6.25 seems to be what it's going for now. And that typically is for the conventional loans, meaning FHA would actually possibly be lower than this. So you can probably get into like the high fives or even the 5%. As my lender had told me, I spoke to him maybe 2 weeks ago because I was just so excited about stepping into the new year, because I will not qualify for most of the other loans. I've been working independently. So when you're self-employed, have your own corporation, you actually have to have 2 years of tax returns to qualify for most of the mortgages. So I finally made it. I've been waiting long enough. I got into certain contracts, but God's plan. They all fell through. They all didn't happen because it wasn't for me at the time. It didn't feel right. Everything wasn't smooth sailing like it should. Similar situation which I had when I was acquiring my first property. It was pretty much smooth sailing. I literally spent 2 hours speaking to the homeowner. We had just good conversations. It was just good vibes. And that's how I knew it was that home that I was supposed to get into. And we didn't have that much back and forth. A lot of things that I asked for repairs wise, they did. They didn't want to do the credit. They actually did the repairs themselves. Now, I can't say it was top of the line repairs, but at least knowing that someone is willing to meet you in the middle always makes it a great deal. That's how business transactions should be conducted and actually be done. Like, you should be willing to meet me in the middle, or else I can't be the one that's bending over backwards and forward just for you to reap all the benefits. It doesn't work like that. Even though I have the financials, I have the ability to do so. The means doesn't mean I should step into a deal like that. If you can't meet me in the middle, I just won't do it. All right, so we got the rates. Now let's just drive in. Let's pull up Zillow. Let's look into our areas. So first one up, let's look at New York. New York. All right, this is all kind of all the boroughs, I believe. Yes, this covers all the boroughs, right? So let's filter. Let's do a reset real quick. First thing we want to see is where are our properties that are listed on the market versus the one at a price reduced. So there are 21,000 right now. We'll reset our filters that are all in the market. Now let's see the ones that are price reduced. Where is our button? I feel like it disappeared. Zillow recently updated their app, so there's a lot of things that I used to see and I'm just not seeing anymore. It's weird. But anyways, let's just go back to our filter, home type, listing status. It's not there. Wow. Oh, there it is. Price reductions only. So we got 2,000. That means it's not really step into the buyer's market. I would say if it's only 10% that are price reduced, it's not really the buyer's market. Remember, we try to look for that 30%. So from last month to now, I don't really see where it's becoming that buyer's market in New York, really. But let's filter down our specifications. So now let's just only look at multifamilies. So maybe that could be a higher number for multifamilies. First, let's turn off that price reduction filter. We're at 4,000, right? And it's 469. It's about 10% as well. So it's not really a strong indicator that it's about to become a buyer's market. I think it's still evening itself out. A lot of people actually aren't buying because of the fact that the interest rate is so much higher. It costs more to actually get a mortgage. So that could be a number of factors. But let's clear out the map here. Brooklyn, which is my area. Actually, let me type in it specifically. This is where I pretty much grew up. Let's see where things are at right now. Multifamilies, let's start there first. Regular homes about 1,000. Price reduction 187. So it's closer to 20% in Brooklyn, but it's still not a strong indicator. It's when if we had like 300 homes or 400 homes, then we know something is happening in the area where we'd have to look into it further. So there's not a strong indicator there. Let's move over to the west side. Let's go into Jersey. So let's clear this up. Yeah, I won't put the draw anymore. So this is like the Jersey City area. So now let's start with regular homes. There's 164, price reduction 15. Yeah, it's not really much going on there. There's not really any fighting that's happening. So that big scare of the market's going to crash out here is going to crash. It looks like it's much more like correcting and stabilizing itself more than a crash happening. Let's check out Newark. Newark, I like to stay up north because South Newark is, they still be throwing down over there and stuff be happening, shootouts and all that good stuff. So we try to stay up north Newark. Pretty much see this line right here. That's like where the train line is. Let me put it in the middle of the screen. You see that gray line across the screen? Yes, where the trains are running. You want to be above that line in Newark. That's just me. If you ever look into Newark, that's what I would suggest. But let's take a look. There's 113 homes, multifamily wise, price reduction. There are 8. That's less than 10%. So it's not much a huge thing over there. Let's do a reset to see all the homes that are listed. So there's 226 and price reduction. There are 20. Same thing. It's like less than 10%. So it's not a huge deal. So that's one area here. I'm not really going to look into the Northeast region, but let's move further down. Let's go to Atlantic City because that's one of the places that I'm actually looking to get into something. All right, Atlantic City, New Jersey. Perfect. So make sure we're on reset. All right, we're on reset. Everything is shown. So price reductions, there's 21. So that's less than 10%. Meaning there's probably a balance of the buyer and seller side. It's not really a strong buyer's market, I would say. It's still leveraging itself out. So it seems to be more of a correction that's happening. Now let's clear this out. Yeah, people are reducing their prices. That's an indicator for you that it's not really a huge thing that's going on. Philadelphia. Yeah, we could look into Philly. Why not? Reset. We should reset 6,000 homes. All right, that's a bigger pool. And let's see how much a price reduced. 1K. So that's actually 1.6. That's less than 20%, I believe. If my math is correct. So it's still not a huge indicator there as well. And let's go further down. The other area that I mentioned was Jacksonville, Florida. So let's go here in the map. What's going on in Jacksonville? All right, there's 773 homes that are price reduced. There's 2,000 that are listed for sale. There's 773. Okay, so that right there, you want to pay attention to because that is a huge indicator. That means more than 25%. You're at the 30% mark with this completely. So you definitely want to dive into further, see what's going on in that area to see if there's anything popping, some deals, what's really causing that. Because if you have that much in price reductions, right? And I just zoomed into a particular area from 1K to see if it changed anything. And it's about the same. Like more than a third of the homes are actually for sale. So that should be a strong indicator of a market that you would probably want to tap into. It's another market I'm interested in as well. But however, because of the distance, I'm not too sure if I'm just going to jump in there yet. I love the tropical side of it. Like it's always raining over there. It's a good place for me to grow some crops if I would ever wanted to. That's really the reasons why I want to get something over there. Now let's jump to Baltimore, Maryland. I will say Maryland because my wife always talks about it that way. She said that's the land where people get married, so I'll go with it as well. All right, so there's 1,000 homes in Baltimore, and if we go through price reductions, There's 329. So that also is a good indicator. But I feel like Baltimore has always been on sale. Like you could always get something at a good deal over there. And they are fixing up certain areas around there. There's still a high violence in particular areas. That's why I also seek counsel from people that are living in the area. But I'm also a person that likes to take risks and bank on. If I see something where the gunshots are happening, I kind of am intrigued to learn more about that area and see if I want to jump in it, because you'll get things at such a huge discount. When things do get back to a norm, you'll see the trajectory of your equities just going to grow so quickly. I've seen it happen in my own neighborhood growing up in Crown Heights, Brooklyn, where a lot of these places just got fixed up. And not to be stereotypical, but it's the Jewish folks that typically are doing a lot of these renovations in areas that are untapped into, people don't want to get into. They see a bigger vision before many of these other ethnicities like see it. So big ups to them. All right, so we joined to Baltimore, Texas. Let's check Dallas, Texas. Dallas, Texas. All right, make sure we reset. Cool. All right, 2,000. And the price reduction, 500. So it's 25%. It's borderline. It's very borderline. You can't really tell if it's seller side, if it's buyer side or not. So that was Dallas. So let's check Houston. Okay, it's there. Reset. There's 8,000 homes. How many are price reduced? 1,000. It's not a strong indicator there. That's like less than, it's close to 10%, but less than like 15%. So I'm not really seeing that as a huge risky town opportunity where you're going to have a lot of good discounts. So that's that. And then the last place we're going to check is San Diego. San Diego. What's happening over there? Let's do a reset. All right, it's 1,000. And then there is 215 results. So that's about 1/5 of the homes. That's 20%. Not a huge indicator as well in the area. So compared to last month to this month, I'm seeing that it's not a huge difference. And I'm not getting a strong indicator that this year starting off as the year that home prices crash and everybody is able to actually get into the home that they want. You have to do some analysis on the numbers to see if it makes sense for you. So let's jump into that actually, so I can show you exactly what do I mean. So let's go to Atlantic City. Atlantic City. There's some places I've been looking at and such. Let's do a reset, right? And I've only been looking at multifamily, so let me take out all these other types of properties. I don't care if it's price reduced or not. That's fine. Regardless, it's all good to me. All right, so there's 17 properties. So let's just quickly look at this list, and I can run some numbers with you to show you exactly what I mean to see if it makes sense. Okay, this home I have been looking at, and I've done a lot of comps on this home to see exactly how can I make it make sense. So let's scroll down into this home. We see that this is a 4-unit. He said fully occupied with excellent tenants, currently bringing a whopping $45,000. Yeah, that's great. You're telling me that, but I love the fact that they actually specified the amount that it's rent rolling. That's always great because it gives you a starting point. And typically, these are numbers that are underneath the market rent, especially if the tenant has been there for some time. You can probably bring it up to market. So I can tell you right now. So 1 unit, he said, has 2 bedrooms and is rented for $800. We'll take a look at to see what prices go for in that area so we can crunch in the numbers and actually do the math. But he says 1 unit is for $800. Unit 2 is a studio being for $5. Unit 3 has 5 bedrooms for $15. Unit 4, 2 bedrooms for $1,000. So you add all that up. That's $800 for $500. We're going to do this math on the fly. Stay with me. That's $1,300. $1,300 plus the $1,500, we're at $2,800, and then the $1,000 that makes it $3,800. So he's bringing in $3,800 right now. And remember, if you're doing FHA, you have to live in one of these units. So let's say you take the smallest one, which is the studio, for $500, right? That leaves you with $3,300 in income that you would earn. All right, so let's see how can we make this make sense. All right. let me just look for the property taxes because we want to make sure we have that, unless they've listed it in the bottom. Sometimes they do not. Okay, so they did. So 2021's property taxes for that property was $67.94. All right, so let's just do some math on that to see what that could be. So we started at $399, but let's factor in the closing costs with FHA and all the other loans as well. You can actually ask the seller, can you put your closing costs inside of the purchase price, so that way you can close with the deal. It's called a seller concession. So for this case, since this is a $400,000 home, you could do up to 6%. So that limits you up to $24,000, right? So let's say we did the max at $424,000. And we did not do 20% down. We did 3.5. The 30-year mortgage. Yes, but let's use the highest of the market rates. Let's say it is 7%, because I always try to blow things out in the worst case, because if it makes sense in these factors, then it makes sense when you actually get the actual rates. So it works out beautifully. No surprises. Mortgage insurance is already calculated for you. This is the PMI, which I was talking about earlier. That's the private mortgage insurance, which you have to pay because you put down less than 20%. Property taxes was at $67.94, but let's bump it up a little bit, because what happened to me when I purchased this one, because of the price I purchased it at, they had assessed the value of my home to be much higher, increasing my taxes the following year, which was purely bogus. I didn't see it coming, but it is what it is. I made it work to this point, because you do get a tax deduction for the property taxes, both on the side that you're renting as well as your personal side that you're living. All right. So let's put it at $8,000 for, yeah, we could leave it at this. Let's say it is 2% assessed at. Homeowners insurance for a house this big, I would say $3,000, because I think they might want you to do flood insurance as well. Because of the area, it's kind of a flood zone when it's very close to the shore. So no surprises again. Let's blow it out to $3,000. Actually, let's put an extra $500 in there just to make sure we're covered. There's no HOA fees because you're owning the home. However, I always put like an extra $500 in substitute of what I call the kind of like what it costs to maintain the home and some common utilities that you do typically have to pay. You do have to pay that. I always get like a internet for the entire house so I can have cameras all over to make sure they're running. I also, you have to pay gas. I'm not sure with this home if it is, but you do have to provide heat. If it's not, then it is what it is. And then water as well. But let's account that this is the additional cost for that stuff, and it's like $500. I'm not too sure if they broke that down. Utilities is separated. Let's see if he provided that. Combined, vacant, living one and rent the others. Yes, the house hack terminology that he's talking about, it's really done with FHA because they expect you to live in one. He's not saying anything about the utilities being separated, so I'm not too sure how that's done. But let's assume it's not. And this is how much it's costing, right? So the $500, it's not really HOA fees. It's really just, let's call it the landlord monthly fees that he has to pay. And this is not really for repairs, it's just for like the utilities, the basic common utilities that you got to pay for everybody. Let's say that's at $500. So in total, we're looking at $4,555. That is way higher than the number that we previously calculated, which was at $3,300. So we're $1,200 short of where we want to be. But how can you make this make sense? So remember these two numbers. $4,500 is our cost, and $3,300 right now is what the house would collect, assuming that I live in one unit for free. So how can you make this make sense? We see that the monthly cost is $4,500, a little over that. So let's say $4,600. Again, we don't want no surprises, so we always round everything over. $4,600, and then the cost, the income actually you'd be bringing in. If you remembered, it was we're staying in the studio for free, right? We have the first unit at $800. We have the third unit 3 at 1,500, and we have unit 4 at 1,000. So you add that together, that's 800 plus 1,500. That's 2,300 plus the 1,000, that's 3,300. Remember that number, okay? So 3,300 is what you would get right off the back if you kept these same tenants as is. So now let's jump over to our rental side. Let's see what can we get for the rental side. So let's reset one more time. For rent now, we switch over in Zillow. And let's start with 2 bedrooms because 2 of the units are 2 bedrooms apartments. So let's see, what do we have? Let's sort it by cheapest to more expensive. And I typically shoot for the middle. So as you see, my scrolling indicator is like right now in the middle. Actually, let me do something else. Filter. Let me see if it lets me do exact. It doesn't let me do exact, but it's all right. So what we want to look for is see what other 2 bedrooms are going for in the middle. This one is for 1,800. I'm not going to shoot that high because it looks like a 3 bedroom is also for 1,800. So I wouldn't even consider that number. So let's go further down. 1,400 is what we see is for this one, that one. So it seems to be like the more common for that average, like 1,400. I'm not going to do 1,300. Never shoot for the lowest number. But let's say worst case we get for 1,400, right? So remember we have 2 2-bedroom apartments. So already that's 1,400 plus 1,400. That is 2,800, right? So we already have 2,800. We got to get to 4,600. So we need another 1,800 and then we should be good. All right, so let's go back to our filter. And now let's change this to 3 bedrooms. Was it 3 bedroom? It was 5, I believe. It was 5. But let me just take a quick glimpse of what that was. I think I can go to recently viewed. Yes. Let's take a sneak peek of what the size of it was. Unit 3 has 5 bedrooms. 5 bedrooms. So never mind. Let's go back to our search, to our filter, and put in 5 bedrooms to see what we get. Nothing. Absolutely nothing. All right, so let's see 4. This is unrealistic. 9,500. That would be great. That would be amazing. But I doubt we'll get that much for that area. As I zoomed out further, actually, I see one here. Let's see what that one is like. It looked like it's a full house. 6 bedroom, 2 bathrooms. 6 bedroom, 2-story home. Yeah, it's a full 2-story home, and it's going for 2,000. It has 110 contacts, 0 application. That also is a number that you want to look for in Zillow. You want to see the days that it's listed and how many people contacted it. The 1-to-1 ratio means it has decent traffic. For this house, it had 110 contacts in the past 80 days, meaning there is traffic in the area. And you could do this as well with other homes. So let's say this person had this 4 bedroom, 2 bath. How long they've been listed? 49 days. It doesn't say the number of contacts and applications, so I don't have nothing to base that off of. This one right here, 15 contacts, 81 days. It's not really a huge amount of contacts. So that price range, I wouldn't find it to be the norm. I wouldn't really set that as your target. You want to shoot below, so if you do end up getting more, you over exceed, then you're happy. This one listed for 23 days, got 1 contact. Because, yeah, it makes no sense. Why am I going to pay $9,500 for this area? I'm not doing that. All right, so we're going to skip all that. So it looks like 2,000 is what we can shoot for. And let me put back 3 bedrooms. Because if we can get a certain number for 3 bedrooms, then we can definitely get it for 5. And we go to the middle, right? 3 bedrooms, 1 bath goes for $1,850. Looks like right in the middle. And this is the other one we've seen. We've seen another house for $2,000. So I think we can hit the 2,000 mark. We only need 1,800. Remember, so far we're getting 2,800, and we're trying to get to 4,600. So we only need 1,800 more, and I think we can realistically hit that. So I would say that still sounds like a good deal to do for that property. So let's go back to the property. Recently viewed. Those were the units, but this one, right? So your unit 1, which has 2 bedrooms, you make that go up to 1,400. Your unit 2, you stay in that one because it's the one that's going to make you the least amount of money anyway. Start there. Your unit 3 has 5 bedrooms. That's going to make you the most money. So you want to make that your most marketable home, right? And we can get $1,800 for that, let's say, right, in the worst case. So that's $1,400 plus $1,800. We're at $3,200, and the last one is another 2-bedroom, which we can do for $1,400, and that brings us to our 46, right? So we have 14 plus 18 plus 14. That's your 4,600. So this is where something like this, it makes sense. Of course, I want to shoot further down to bring the price down even further because, as we can see, this had a lot of days on the market and only 8 people saved it. That means it doesn't have a lot of traction. When you see a low amount of saves on Zillow, that to me tells me that nobody's really interested in a home like that, because the homes that have a lot of saves, they typically have a lot of attention and people are reaching out about it, want to know more about it. So this one right here, you could try to talk it down. So once I'm ready, that's probably one of the ones I'm going to tackle down. I'm giving you some of my sauce right now. I'm revealing some of my tactics. But this is where a home right now makes sense at the current market rate. So I don't want to hear about, it's a bad time to buy. That there's no such thing really. As the numbers make sense, it's always a great time to buy. Real estate is always going to appreciate. You can always cash flow. People are always going to need somewhere to live. And you can always get the depreciation cost. Like the IRS is not going to take that rule off, because they love when you are renting out your home and you turn into a business and you're buying home. You're keeping the economy flowing and you're helping people stay in places. That's why they have these benefits in place. So all these factors always play into things. So yeah, that's pretty much the updates I have for you right now. So it doesn't seem like the market has taken that shift where it's really strong on the buyer side. You just have to really be optimistic and as well as keep your guards out to see what numbers make sense for you in your particular situation. If you're doing a multifamily thing, I strongly urge and encourage FHA as a starting point, because you're able to build the same amount of equity whether you do FHA or conventional. Same amount of equity difference. The only thing is the PMI, the private mortgage insurance. And if you take the difference of the cash that you were going to put on that 20% down payment and you actually invest into the markets, and it could be a mutual fund that's returning you 10% a year, right? Right now, things are still low. Great time to put into index funds, mutual funds. You're going to make that return much quicker. You're going to be able to save a lot much more money versus you doing it the other way where you put a large percentage down. So I think it's worth exploring that option. However, you should speak to your lender, see what options works best for you. Speak to your financial advisor, accountant as well, because there's this tax factor that goes into it. I remember the first year I purchased my home, I received a nice credit because of the origination fee that I had to pay for the loan. So you get a lot of tax credits from the beginning your first year. So look into all these things. And if you have any questions, of course, for me, I'm always around to just drop a comment and I'll look through it and I'll answer it as the best way as I can. I'm not a financial advisor. However, all these experiences that I've gained across the years, I'm just sharing it with you. So I hope that inspires you. If you are not to your first home, that you get into it. Do not wait blindly, because I also had a friend of mine back in 2018 when I was looking. I said, I'm going to go look for property. He said, things are too expensive right now. Don't look to buy. And realistically, things has not gone down. It just kept on going up. If anything, it skyrocketed after 2019. Which is after the year I purchased it. So it's always a great time to buy. Just be optimistic, do your own financials, crunch your numbers in, speak to a lender, financial advisor to ensure that this is the right decision for you. So peace and love. Have an awesome one. Any questions, once again, drop it in the comments below. Suggestions. I'm always open to feedback at any point in time. Like, share, subscribe, and I shall see you next time. Peace.